This is a pre-market analysis of 14th of July, and it's a Nifty expiry day. So just like yesterday, we are going to get a gap down of 160 to 165 points today, and Nifty is going to open around 24,000, which in itself is a big support. So whatever I discussed yesterday, exactly the same as what I need to discuss, right? So 24,000 is where Nifty is going to open. Even yesterday also, despite market gave that big bullish rally, I've told you how I've managed the positions also in the post-market analysis. So today also, when it is opening at 24,000, it is repeatedly coming to 24,000. So first time they will try to defend that 24,000 level. But if that break, then there is a possibility that it can move down. Now, always keep in mind, yesterday, even though you got such a big gap down, the rally on the downside was not there. Firstly, because put sellers became aggressive, the inflated put premiums, you can make it sideways, or you can give a bounce, and then the put premium will come down. And for that, there was a favorable condition. If you look at the previous day, FIIs were net buyers of more than 2,000 crore. Combined institutional buying was close to 5,000. But yesterday, if you see, despite that rally, FIIs were sold for more than 3,000 crore. So that confidence is not there. So now when you get the gap down, now we think that yesterday FIIs were sellers. So what if they sell again? So that impact will definitely be there. So first time, definitely at 24,000, there will be a defense, which you will find. There will be more put sellers. They'll come aggressively and try to, build position, try to average there. That's exactly what happened yesterday. Even I also did the same. And it was sell on rise yesterday. But market just went crazily like that, and you need to keep adjusting. But today it's again a very clearly sell on rise, because now there are new developments coming. Trump is talking about the blockade which is going to come again, and Trump is also planning to charge 20% tax compared to Iran's 10% tax of the vessel value. So that all I'll be discussing in this session. So the point is, it's going to open at 24,000. Unlike yesterday, there are more negativity today. So there may be a possibility, though they'll try to defend that 24,000 level. It may break also. And if they break that level, 23,800 is the next level. Otherwise, market may remain in that range for quite some time. Just looking at yesterday, the big rally of 250 points. Now, when you're getting that entire 200 points wiped out, market can only sit and watch, and it may consolidate only, right? Because you need such kind of adjustment. Okay, now that's the thing that I want to tell you. Sell on rise. But if they break the 24,000 level, there can be a steep fall also. But it is always better for you not to chase that, rather wait for a bounce so that you'll get a better trade. So even if you tried the same yesterday, but it did not work out as an option buyer, today it may work out. So that's how market is, right? So you need to keep trying the probability. But again, the idea is not to chase it. Now, let's come to the current situation. There is no confirmed agreement between US and Iran to stop the attacks fully and reopen the Strait of Hormuz. That's the bigger issue. Neither side is willing to compromise over the control of the shipping routes. And Trump have made a statement that Trump is going to reinstate the Iranian blockade, and he claimed that US would probably take control of Strait of Hormuz. And he also proposed collecting 20% cargo value from Middle Eastern countries that is benefiting the US protection. So if Iran, so far there is not, no such tax or any toll, but even Iran is talking about 10% cargo value, but now US is talking about 20% cargo value. If that is the case, why you need to pay 20% to US? Instead, you can even pay 10% to Iran, and you can have a safe passage. So there is no sense whatever he's talking about. And if you look at the shipping update also, the shipping traffic have fallen drastically to the lowest level in the last 2 months. And last day, only 6 visible vessels crossed through the strait, and you can see that have a huge impact on the oil. Oil have increased almost 3 to 4%. And yesterday when we discussed, and then another 5%. Now WTI is at 78. Brent crude actually came above 80, crossed 80, and it's now trading at around 83. So that is not good. Yesterday, even though when the market fell, global market was also negative, and we got such a gap down, but crude oil was still below 80, but now it crossed 80. So that is big negative. Okay, now global market yesterday, if you see, I told you in the post market, Samsung have fallen almost 10% and hit the lower circuit. Semiconductor stocks like SK Hynix, and also SK Hynix have declined almost 10-12%. Samsung also the same impact. And even if you look at US semiconductor stock also, Micron 7% down, SanDisk 10% down, Seagate 6% down, AMD 4%, Intel 4%. As a result, Nasdaq is 1.55% down, Dow Jones is 0.29 down, and S&P 0.79 down, and VIX is increased by 14% and moved above 17. Now, if you remember yesterday post market, I told you I am not trusting this up move because still look at VIX. VIX is 9%. At one point it was about 10%, but despite the market moved higher, VIX remained high. VIX never have fallen. VIX remained at 9%. VIX remained at elevated level. So that is an indication that you cannot trust this up move. And I told you at any point, I didn't try this up move as a bullish trade. I tried and I gone neutral. Though when I go neutral, my profit will be less, but I may not be in a loss, and I'll still manage a small profit with the straddle with the adjustment, right? So the point is VIX was so high. So in that way, I'm getting good premium also, and at the same time, I'm not getting trapped, with a fake upside rally. But yesterday it was complete one-sided rally. Now today, now opening itself, you are seeing, but chances of trading opportunity is very less because 170 point gap down itself is taking out the entire move and coming to the support level. So they may consolidate, they may bounce. Gift Nifty is at around 24,050 when I'm recording this video. That's around 170 point gap down. But there is some positive that ADRs are not that negative. Infosys ADR, ICICI Bank ADR, both in fact close stronger than the Indian market, but HDFC and slightly negative than the Indian market. Wipro, not much change, right? Apart from that, yeah, inflation, June CPI inflation, if you see 4.38, May it was 3.93. So first time in 17 months, inflation moved above 4%, and that's mainly because of food inflation, and that's something which is expected. Food inflation in May was 4.78, now increased to 5.32. What's the reason? You can even see from the hotel itself, right? The prices have increased. Firstly, there is a war. Secondly, because of weak monsoon, and this impact will be more visible after a couple of months. So still, this is within RBI tolerance band. So that's not a big issue. Coming to institutional activity, FIIs were net sellers. Yesterday, they sold 3,600 crore. DIIs, net buyers, 2,200 crore. Right, and if you look at the derivatives data, put open interest is around 20% added, call open interest 6%. Why put open interest 20%? Because you can see 24,000 where it opened, and then from there onwards it just keep going up. So it's a supports, puts is what they've added. PCR yesterday it was around 1.2, now it is increased to 1.38, which is strongly bullish. But VIX is high, global market turned negative. Oil is also closing 80, now turning big negative. So what will happen? Huge call open interest will come and market may crash. But if 24,000 they take support, again put open interest addition will come. So these put side people, they'll have to keep doing averaging. This much put is already added yesterday. So one opportunity you are getting to average. So that level will be defended. If that is breaking, then short covering on the downside, that, give a big rally. So that's something which you need to try to capture. Okay, participant positioning also. Clients, the retailers, they have actually reduced the bullish position from 16 to 14. FIIs, they reduced bearish position also from 16 to 12. And prop traders shifted +4 bullish from neutral yesterday. So the negatives are US naval blockade officially restarted. US and Iran continue taking very aggressive position, and Trump proposed toll collection in the Strait of Hormuz, which is very bad, and oil moved above 80. That is psychologically very bad. Semiconductor weakness across the world, right? And US markets closed negative. Gift Nifty is indicating 160 point gap down. All these are big negatives, nothing. FIA is also sold yesterday, right? So all these are big negatives. Small positive is the inflation, it is actually high, but still within RBI's tolerance band. But I would like to put that in negative. But compared to the other negative, it is not a big negative. IT ADR still remain positive. HCL Tech results also very strong. I don't want to discuss that. I have the result in my, system, in my, data which they have given to me. But that again going to take a lot of time. So that's it, guys. Thank you so much. We'll stop the session. I hope you will trade responsibly. Even if you look at the call open interest, 24,000 is the support, 24,200 to 24,300 is the major resistance. 24,000 is broken. Put side short covering will be there. It can lead to 23,800. That is the next level. So watch out these levels. 24,000 is where it is opening. So one round of support is expected, but that doesn't mean you can blindly take a trade. Like yesterday, when there is a falling knife was there. Don't try to catch the falling knife. So once you are getting a move above 20 MA, then you can try. Otherwise, leave it. So if you would like to join us for the live market mentoring, that community, you can talk to my team and you can join us. So you can trade together, we can trade together, and we can learn together. So see you there.